Investors can realize big profits by not overlooking the stocks of medical tools and devices. Non-pharma healthcare stocks can present a solid stream of income for your portfolio. Becton Dickinson, double-digit growth from its life sciences business drive stock. Boston Scientific, its atrial fibrillation device is winning clinical trials. Edwards Lifesciences, its share price doesn't represent its good results. That's going to change. Aside from medicinals, devices and tools from the non-pharma world could highly benefit investors. Let's dive in. Beyond pills. Here are the 3 non-pharma healthcare stocks for healthy gains. Welcome to Timely Investment Research. When you consider healthcare stocks, do you automatically think of pharmaceutical companies? Most people do. However, some of the most significant gains over the long haul are often non-pharma healthcare stocks. In September 2022, Barron's asked prominent portfolio managers about the emerging themes in healthcare. Wellington Management Portfolio Manager Ann Gallo mentioned utilization as a big trend, benefiting healthcare facilities and medical device manufacturers. Other non-pharma themes included digital healthcare, managed care, and medical services. The 4 panelists brought together by Barron's listed some of their favorite healthcare picks, but we're going to delve into 3 alternative healthcare investments unrelated to the pharmaceutical industry. Each name will have share prices up in 2023 and rated overweight or better by the analysts covering each stock. Number 1. Becton Dickinson. Becton Dickinson is up nearly 9.9% year-to-date. Of the 19 analysts covering its stock, 14 rate it overweight or buy, with a target price of $302. When Barron's piece was written a year ago, the medical supplies and life sciences tools and technology company traded for 14x earnings before interest, taxes, depreciation, and amortization. It now trades at 18x. The third quarter 2023 results show revenue increase by 6.3%, excluding currency, to $4.88 billion, with adjusted earnings per share increasing 15% to $2.96 a share. Revenues were up in the U.S. 57% of sales, and internationally 43%. For all of 2023, it expects $19.3 billion in revenue with adjusted earnings per share of $12.21 at the midpoint of its guidance. Number 2. Boston Scientific. Boston Scientific is up nearly 19% year-to-date. Of the 32 analysts covering its stock, 28 rate it overweight or buy, with a target price of $60.50. In Barron's Roundtable, Gallo pointed to the company's above-market growth in all its key divisions. It is positioned to grow broadly for some years into the future. The medical device company's shares rallied on August 28 after it reported positive results from its clinical trial for its atrial fibrillation device. The FARAPulse pulsed field ablation uses electric fields to remove heart tissue causing irregular heartbeats rather than the more traditional thermal method, Investopedia reported. The study involved 607 patients with paroxysmal AF who had previously been unsuccessfully treated with at least one antiarrhythmic drug. In second quarter 2023, the company's revenues rose 12% year-over-year on an operational basis to $3.60 billion. The company's guidance had called for 8% growth at its midpoint. Its adjusted earnings per share in the quarter was 53 cents, 4 cents higher than its guidance. For the year, it expects sales growth of 10.5% to 11.5%, with adjusted earnings per share between $1.96 and $2. Number 3. Edwards Lifesciences. Edwards Lifesciences reported its second quarter 2023 results at the end of July. While they were better than expected, its shares fell on near-term growth concerns. It is exiting the pandemic with its leading TAVR, transaortic valve replacement, franchise well-positioned for continued growth after the recent lull, Barron's reported on Gallo's comments last September. Over the next decade, 2 newer and currently smaller markets, mitral and bicuspid valve repair, will join TAVR as important growth engines. Despite the decline at the end of July, Edwards Lifesciences stock remains in positive territory year-to-date, up nearly 5%. Over the past 5 years, it's up 62%, higher than the S&P 500. Of the 30 analysts covering its stock, 16 rate it overweight or buy, with a target price of $99, considerably higher than currently trading. In 2023, Edwards Lifesciences expects revenue of $6.0 billion at the midpoint of its guidance, up from its previous estimate of $5.8 billion. It expects to earn $2.55 a share this year, up a penny from its previous guidance. Also, it is hopeful that TAVR will generate $3.93 billion in 2023, accounting for more than 65% of its total revenue. This would deliver growth of 11.5% year over year, excluding currency. As recently as December 2021, it traded near $130. It's got the growth to get back there in 2024. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.